Following this report, you actually raised your price target. Your new price target's 501. That's about a 18% upside from here. What are you seeing that investors aren't seeing?
So you have to understand and look back at Microsoft over a long period of time under the management of Nadella and Hood. The company has been very controlled in their ability to manage the cost to the revenue. And if you look back to the original cloud transition, the company invested aggressively. They bet the business on the cloud, and they proved it to be right. They're betting much less, but they're betting nonetheless on AI being a big business. And they are generating the largest amount of AI revenue of any software company. And you're starting to see it not just in Azure, you're starting to see it in other parts of the business. And so look, cloud grew a little bit slower. There are some moving parts to that. There was some European weakness. There's still constraints on capacity. They're building massively new data centers to support the AI requirements. That is taking some time, but management is guiding to the back half of the new fiscal year, acceleration in the revenue. So if you take management who has been very truthful at their word, you're going to see a better story as this year unfolds.
All right, so you're saying we're going to see a better story as the year unfolds. Let's just focus on this quarter for a second, Mark. I'm looking at CapEx. CapEx spending up 78% year over year. We saw Alphabet get dinged by that. We saw Meta a quarter ago get dinged by that. Is some of that the reason why we're seeing pressure on the stock, that investors think they're just spending too much money?
I don't know that they're necessarily concerned of the spending per se. They're concerned if the company can convert that spending into profitable revenue. Management has a history of doing that. Again, they did that with the cloud, which was a negative gross margin business in the early days and is very profitable. They're doing that with AI. You're already starting to see the fact that Azure AI margins are probably very healthy at this point. So you have to give them a bit of credit for what they've done and the fact that they are driving a business transformation and leading the AI charge. We called our note that they are the art of the tightrope, because the fact of the matter is Microsoft is driving to be number one in cloud, number one in AI, while driving more strong margins. That's very difficult. And if there's anyone who can do
difficult. Yeah, I mean, one of your colleagues from Jefferies said they kind of tripped over a hurdle, but they're still leading the race. It sounds like you share that opinion overall. One other segment we just got to touch on, personal computing. They came out with these AI computers not too long ago. It was 2.5% above estimates. Should we be expecting more from the Surface and the other sales here from Microsoft, or is this about where you think it should be?
Well, what you're going to see is not in Surface. Microsoft is pivoting from being the driver of the hardware to the partners. Where you're going to see this is in the Windows business. What Microsoft wants is every Windows PC manufacturer, tablet, whatever, is going to build AI devices. And this is to drive the inferencing of AI down to the device, which is, by the way, what Apple is doing with the iPhone. And that's going to drive margin improvement. It's going to drive success of AI.
So one last question, Mark. Mark, we do have to go. Yeah. I want to ask you one last question. Microsoft said M365 Copilot customers grew 60% quarter over quarter. Is that the strong growth that you were expecting when it comes to these AI Copilots?
We really haven't known. This is the first data. They're showing not only the seat growth, but they're showing the customer growth. I think that's very healthy. At this stage, in what is an early product, I think that's a very nice sign to see.